Hello and welcome to PQ Prime. I'm Hiraldani. A lot of movers and shakers in trade today. And to discuss the stocks, joining us on the show is Vinit Bolinjkar, Head of Research at Ventura Securities. Welcome to the show, Vinit, and a pleasure to speak to you as always.
Thank you, Ira, for having me.
Vinit, my first question coming to you is with regards to a KC International. If you see in terms of the stock, we did see a gap up opening on the counter on the back of an order win. What's your view with regards to a KC, and what would you recommend an investor to do?
No, it is definitely a buy. Their order book is very strong. Their pipeline of orders that they are expected to win is also very strong. Margins continue to uh, be quite, have little flavor of an upside. And we believe that the stock is quite reasonably valued. So you can expect a upside of about 15 to 20% from current levels.
Right. So that's with regards to where a KC International goes. Moving on, Samvardhana Motherson is looking to acquire a 540 million euro German cockpit module integrator. Now, on what do you think would this acquisition actually mean for Motherson, and how do you see Motherson as a stock? Good entry levels currently?
See, Motherson is always acquiring companies, to improve the per car business that they get. And while these acquisitions are very positive, what is happening is that the company, although is doing well on the P&L basis, on the cash flow sides, the break even tends to get pushed out by a further 1 year. So while we are expecting the company to become a free cash flow generating company in FY24, I think with this acquisition now you will be, pushing out your cash flow, free cash flow generation 1 year out further. So always, that case for, when the company will start rewarding shareholders will continue to remain. Having said that, the business metrics are quite positive. Growth will continue to take place. Globally, we are seeing an expediting of the, the due to the climate change, we are seeing EV volumes grow very fast, and the anti-inflation measures in the US and Europe, Make in India, will help improve the business of the revenues of the company.
Right. So that's with regards to Motherson Sumi. Coming to PNR Industries. Now, PNR Industries has bagged an order as well. And overall, from a stock price perspective, strong moves coming in today. 1 month, a 37% kind of up move is what we've seen in terms of PNR. What's your view on the counter?
So, PNR is improving its business mix of value-added products very smartly. And we also expect operating leverage to kick in. And currently, we think that the valuations of this stock are quite benign, and the stock could be headed to about 120, 130 rupees over the next couple of years. The only concern out here is going to be the working capital. They have to manage that well. But apart from that, I think strong growth in the engineering and fabrication business, the US market business also doing well, and the recent acquisition also helping them. I think things should be positive on this stock. So this stock definitely will see good levels going ahead in the next 15 to 18 months.
Right. So that's with regards to PNR Industries. Moving on from the pharma space, you have Cipla. That stock is trading under pressure. It's down almost 6.5%. And this is on the back of the US FDA observations that have come in for its Indore plant. Overall, your view, I know we need more clarity coming in there, Vinith, in terms of what the observations are, etc. What's your view overall for Cipla and the pharma pack as a whole?
So Pharma Pack will continue to have mixed opportunities, and particularly to Cipla, I think these 483 observations are quite negative, obviously reflected in the stock, and its ROCs are not very attractive to us, so does not feature on our buy list of pharma stocks.
Right. Moving on in terms of HUL now, that's an interesting one. Overall, they're selling off their atta and salt brand as well. And it's a 60.5 crore deal. What's your view? Because clearly, when we see FMCG companies and biggies like this, they've been on an acquisition spree. And this is one-offs where we've seen them actually sell off two of their brands.
So it's a very clear move towards having more focus in your business, right? 60 crores in such a large balance sheet does not really add up anywhere. And the atta business is, it is not the forte of Hindustan Lever. So they've decided to get out of the commodity-based, uh, package business completely. Overall, if you see, the home business has grown very well. The fashion brands and the beauty is doing very well, while the uh, foods package business is growing at a snail's pace. We believe that the inflationary pressures will continue, and the margins will be a tad lower than last year. Overall, we think that the stock could go up another 10% from the current levels. But there are much better stocks to look at. We would rather look at the Nestle. Nestle did very well compared to HUL among the FMCG packs. Another thing that we don't like is the company, continuously improving the royalty payouts to its parent. So that is also going to be a kind of a tad pressure on the margins.
Right. So that's with regards to where an HUL goes. Vinit, moving on, another stock that's in focus is a Triveni Turbines. Now, the stock is seeing smart gains in today's session, and they're planning to raise capacity to almost 350 turbines annually by FY24. In fact, they're seeing a clear mandate towards green energy transition and considering investments in this field as critical. What would your view be on a Triveni Turbines?
So, they consistently maintain more than 50% market share. Segmental performance is going to be strong because of improvements in waste heat recoveries and industrial pickup happening. However, the valuation continues to remain rich. So, we would be, we would look at this stock as a steady compounder more than a growth stock, given the valuations that it's trading at.
Right. So that's with regards to where Triveni Turbine goes. Moving on to banking counters are in focus as well. That is Kotak Mahindra Bank and IDBI Bank. And that's because FTSE has added both of them to its global equity index's large cap segment as a part of the semi-annual review. So first, your view on the banking space as a whole, and in that, Kotak as well as an IDBI Bank.
So, banking sector will continue to do well. We believe that the economy cannot grow without credit, and given that fact that financial inclusions, all the various aspects of finance, banks are very well placed to mine their retail as well as corporate clients. Given that we expect the sector to grow at 1.25 to 1.4 times the GDP of the country. And if you take this into perspective, I think Kotak will do clock in about 23% growth in advances. The stock is trading at fairly reasonable valuations, and we can expect a 15 to 20% growth in the performance of this stock going ahead. The issue that remains around Kotak is that in December 23, Uday Kotak will have to resign. And then the succession planning is one of the key monitorables out here.
Right. Apart from these counters, one question, Vinita, I want to take with you is last 1 month has been slightly weak in terms of the banking space as a whole, right? And we're seeing a good uptrend that's coming in terms of IT majors. So do you think there's a shift happening from banking to IT from an investment perspective? And if yes, your view on IT?
So, on IT, we have been underweight for quite some time, and we continue to remain underweight given the fact that the technology disruptions that are coming across are quite unnerving. And we want to get a clear direction in which way the trend will change. Okay, we believe that the international markets are tired. They don't have the spending power, and because of AI inclusions, we believe that the human element of contribution to the business will kind of come down, and until our domestic software service companies do not revigorize or refresh their portfolio with the newfound world, I think their margins will remain under stress, and they will continue to post very meager growth, and so we continue to be underweight on that stock portfolio.
Right. So that's the overall view coming in terms of banking, IT as a sector, as well as the stocks that we spoke about as well. Thank you, Vinit, so much for joining us on the show and sharing your views with our viewers. Stay safe and speak to you soon again.
Thank you.